So today we're going to be talking about healthcare, and many people who are earlier on their FIRE trajectory or who have always only had employer-sponsored insurance may be wondering why to make such a big deal about this. But those of us who have been towing this road for a while or who are now post-FIRE, it's a very real thing. And let me just put some dollars on it. For myself, paying my healthcare out of pocket in the U.S. is my second highest expense every month, and it's not much less than my mortgage.
Wow.
So it's a very real and important aspect. But if you plan for it, if you understand the landscape and your retirement budget is set up to accommodate it, it's an expense just like anything else. But it is one that is of such high importance that you really want to get it right. And so our goal here is really to just add some information to that so that you can be that much better prepared.
The funny thing too about it is that it's not, like your mortgage is generally a fixed cost. Like this is something that's going to change potentially based on whatever your income was the prior year. If you're a business owner like me and your income fluctuates from year to year, it's going to change based on like the level of service you want, or, whatever your premiums are going to increase. Like there's so many unknowns that it feels really difficult to pin down.
Yeah, absolutely. And Eric, I'll be honest, particularly later in my career, once I had reached a certain level of achievement, I was selecting some of the best healthcare options available to me because my employer was paying the lion's share of the cost.
Yeah.
So even if it was, let's say, $300 a pay period for this gold level plan, well, I wasn't really thinking about it because it was just an expense. It was a few $100s. And, I had surgery a year ago that when I saw the bills coming in that somebody was going to have to pay, right, those could be $90,000.
Yeah.
But I didn't pay anything like that because it's easy to miss how vital of a topic this is. But when you have to pay for it yourself, it's essential that you understand it and that you are making informed choices that are going to benefit you and your family.
Yeah, totally.
I've worked in HR for all of my career. I've worked on all sorts of retirement programs, including pension plans and savings plans, which is your 401k plan, all the way to executive programs, that type of thing.
Amazing. Okay. So you have way more experience with this stuff than we do. And I'm just full of questions about, as I am pre-FI, Jason's obviously, he's made it to FI already. And we end up talking a lot and focusing a lot, I think, on subjects that aren't really related to like health insurance, healthcare, because we're relatively healthy at our age. We may have had circumstances with our parents or family members where we kind of brush up against that, but healthcare, especially with respect to cost and all the options that are available, insurance, like it just seems like this kind of intractable problem. And so I'm hoping that you can help us kind of decode this a little bit.
Well, if I could do that, I would be very successful in all of my endeavors. So I will add what I can.
Okay.
And if anything else, I'll make you feel not so alone in that battle of trying to figure it out.
So you're confused too? Is that what you're saying?
It's a confusing market, right? Listen, There are no rights or wrongs. There's lots of individual answers and things to look at, which is the worst thing to be told if you're looking for, just tell me what to do, right?
Yeah.
So, yeah.
That's what I was hoping for. So what do you find are the most common kind of misunderstandings that when you're talking to people about kind of health insurance, purchasing health insurance?
Yeah, well, the worst thing that ever happened to health insurance was the HMOs out in California, right? Because they made everybody feel like it was a club, right? You just went to the doctor, you paid your $10, and you were healthy. And you liked everybody you talked with, and the medical care was great. And that all worked really well for about 10 years on a small scale. But it never worked well on a large scale or for a long period of time because of changes in medicine and changes in how you're getting paid, all those types of things. So what happens is people come at insurance like it's a club. I'm in the club. I want it all to work perfectly, and I want to pay $10. And that's just not a real expectation. There are lots of different designs for how you can access medical care. The real key is not all medical care is created equal, so pay attention to where you go and why you're going there. And not all medical coverage is created equal, so make sure you know what you like, what matters to you, and focus on those kinds of programs.
So how would I go about figuring that out?
some things you can just know as the kind of person you are.
Right.
You can tell just by the few minutes we've talked, I'm pretty opinionated. If I don't think a doctor's listening to me, I'm going to change my doctor. So for me, it's very important to have choice, to have access to anybody I want to go see for whatever I want to go see, and to be comfortable with that. Now, I pay a premium for that, and I pay it for myself and for my family, and I have to plan on always paying that. As long as I have choices, and I have to set my expectations when I get to be 65. I'm not going to be able to do so much of that as I do now because the medical programs change and you have less of that kind of choice. So it's about who you are and what's important to you.
How often does someone like you then reevaluate like your insurance? Is it a yearly thing? Is it every other year? Or is it just like life events? Like I mean, for people who are entering FI, that's a pretty big transition, right? So that's an obvious point to reevaluate. But once we're there, someone in Jason's position, like, what is it? Every year you would expect to do that? Or what's your advice?
Yeah, I mean, honestly, I don't think you have to do it that much because if you know what you want, you know what works for you, that really doesn't change that often. The things that will change are things that are outside of your control, your premium, your carrier, your, if you're outside of the U.S., some of the government coverages might change and you might need to buy up to get something where you didn't need to before. So it's usually outside action that will trigger you to have to look at it. There can be things like if you're becoming a single person, right? So if you lost a partner through death or divorce or however, and you know that you have a very different access than what your partner did, that's a good time to take a look and see if you want to make a big change. But otherwise, those things that are important to you are really going to stay consistent.
What are some of the common misunderstandings that people have about healthcare when they're sort of exiting a employer-based plan?
Yeah, so there's a couple of things on that. If you're exiting, at a age where you're still viable, doing a lot of things, and you're out there and just trying to get something off of the networks, which is, in the States, either the ACA programs that are run by each state, or you can get, private coverages. It's really just price and how those different aspects figure into the price, right? So if I want an open network, how much more does that cost? And if I go to a closed network, which is like a PPO kind of plan. So those are really the biggest changes. Then the specific things about deadlines. Lots of people always thought, and you may remember from your working days, that you had a finite period of time that we told you can enroll. Those aren't company rules; those are tax rules, right? So you will find that the U.S. and you still have an enrollment period, and you have to fit in that enrollment period. And they do not play games. There is no getting in outside of those periods. So the deadlines are real, and the price impact are the biggest items for people who are just leaving the workforce.
I was wondering
for the folks who are, go
ahead. Just to speak to that open enrollment period, right? That's the term. So
open enrollment and enrollment. Yeah.
Is there an exception for like? I always thought there was an exception for like a life event, like, okay, my spouse lost their job, for example.
Qualifying life events.
Like, is
qualifying life events? You generally get 31 days from a qualifying life event, which is having a baby, getting married, losing a spouse, losing a job or coverage for things like that. And the government will give you the same ones, but there are no exceptions for, I had a baby, but I was offline for 3 months after that because of other things. You still miss that deadline, and so you will have a big hole in your coverage.
Does retirement count as one of those like qualifying events, or no?
Retirement could count because you would probably lose the coverage you're on, so you'd have to switch. So if you are losing your active coverage at work, then it would be a life event. That's also important and here's my public service section for folks in the U.S. for Medicare. Anytime you become eligible for Medicare, you must take Medicare A and B. I tell people, Jason will tell you this at cocktail parties, I don't care if it's 20 years out or 6 months out, write it down. The government does not give any leeway. You must take A and B. And inevitably, a couple of times a year, someone will say, oh, I didn't choose B. It was a buy-up. I didn't need it. You need it. It's every single retiree plan you ever sign up for will assume the government will pay A and B. And if you don't take it, you will have penalties for the rest of your life on medical.
Okay,
so,
you totally you lost me.
And all you have to remember is sign up for A and B. That's it.
But okay, so like maybe this fits into that, like there are so many things as I approach FI and I'm talking to Jason and he's like insurance this and insurance that. And I'm like, oh no, like what are some of the hard like deadlines? Like when I think Medicare, I think, oh, that's for when I'm 65. Is that right?
Yeah.
Okay.
That's for when you're 65, and you will barely remember anything except for I will scare you enough with this conversation that you'll say some crazy redheaded lady said something about A and B, so just whatever that is, sign me up. That's all you need to do.
Okay.
It does. Some folks who work past 65, they have to sign up right when they leave. As soon as they lose active coverage. So as soon as they leave, they have to get in touch with the government and sign up for A and B. You have an older spouse and your spouse becomes 65 and they're not on your coverage. They have to sign up for A and B. Okay. So you'll get into all those other, AARP will start sending you things. Again, this is very U.S. centric, but they'll start sending you reminders and telling you can enroll in their programs. By the way, they have a very nice program, so definitely keep that out as an option. But nobody can help you. Even the power of AARP cannot help you if you do not take A and B when you're eligible first.
So it's a one and done. Like you can't go back and reverse that decision.
You can go back in, but they will charge you a penalty for the rest of your life, and you'll have a hole for the period, and it could be up to a year, and that is going to be some big costs.
Wow. Okay. Interesting. So, and is the difference between A and B, not to get too technical here, but just for my own edification, A and B is like one is health coverage and another is prescription drug coverage, or is there some other nuance to it?
Prescription drug is actually D, which
D.
We love D. Actually, we like D a lot, so that's fine. But no, A and B is the difference between a doctor's visit and a hospital visit. Oh. And so they can really meld back and forth because you see the doctor in the hospital and all those kinds of things. But if you don't take B, right, so A is really the hospital, B is the doctor's portion, you will have a big hole in coverage for that period of time.
Wow. Oh, thanks for just making it more complicated. Appreciate that.
That's all you have to remember. Everything else you can fix. That's the one you can't.
Much of our audience are people considering early retirement. And so they're going to keep in mind what you've just said about Medicare, but they also know they're going to have a number of years, in my case, 17 years from now, where I'll be eligible for Medicare. So I think it'd be helpful to review in brief, what are the options for an early retiree in terms of getting healthcare coverage in the U.S.?
Yeah, and in the U.S., they really are dominated by the ACA, so or Obamacare, if you like the name, which I wouldn't mind having it named after me. I think it's a pretty awesome program.
Right.
And those are really designed to work well with each state program, right? So it will meld in with what they offer through other kind of family programs and things like that. So some of the limits, some of the designs, and some of the carriers all utilize what the states already are using for that. So that's why you'll see lots of different ways of running it. The cost per state is also about who's living there, right? So you will see things like in New York, the premiums are very, very high. And they're very high because there's a lot of people being covered. There's a lot of folks who are a little bit older who are in that, and because they do not separate by age, right? So the way their philosophy is they charge everybody kind of the same, which makes for a 21-year-old it would be a very expensive program.
Right.
Yeah.
But for 62-year-old, a little bit more reasonable, right? So that can be very expensive, but it's very good coverage. So you do have to get to know which states you're in and what the policies are for all of them. Some of them can have a lot of very helpful means testing that can get folks in and have different prices for depending on what your income is, which can be different than what your assets are for retirees. That, something you can actually pull triggers on. So knowing that information and maybe looking like where you want to land can help with that. Each of the programs usually have tiers, right? Basically your gold, silver, platinum, and you'll get more for one versus the other. But they are pretty good. There are a lot of benefits that you can get from largely managed programs, which means, the insurers have to listen to if you make a claim because it's getting to a person. If you're doing some of the smaller one-off kind of, I'm buying it from my insurance provider, you don't really have those catch-alls to help be your advocate. So sometimes those can be tougher if you do run into problems in the plan. They can be cheaper generally, but you're going to fall into just that much larger, wholly insured group that doesn't have some of that advocacy.
So the basic options are private insurance or buy it on the healthcare exchange?
Oh, yeah, it would be the private plans or the exchanges.
And when they're looking at your income, since it's an income-based program in the ACA, right? Is it prior tax year? Is it an average of the past three, or is the look back
I believe
period?
it's prior tax years, but
Okay.
I'm not an expert on that, so you'll have to check on
Yeah.
each of the
Sure.
each of the levels for the states. Yeah.
Okay. It's interesting. I didn't know that about that. Every state administers the program differently with respect to age. Do you happen to know some of the more favorable ones? Are you familiar with any of those?
I want to say the lowest one I heard was Montana, but you got to live in Montana,
Yeah.
So
Beautiful state.
But it's a beautiful state, yeah. But it's they all have different. Some of them do age banding, so
Okay.
you will get priced based on your age. I just happen to know that New York does not.
Yeah. Okay. Interesting. And the residency is like more than 6 months out of the year kind of thing, right? Is that what?
I think that depends on utilization, right? So if you are in a state and that's where you see your doctors, et cetera, but you travel a lot, I think they'll still let you enroll into that state.
Oh, interesting.
So
Now,
I think you have to prove some of that, but
Sure.
you have
Yeah.
to check with each state.
No, cool.
The natural thought I have, based on what you guys were just discussing, respective to different states and age stratification or not, it sounds to me like that means in those cases where it's not, sort of different by age, private insurance could potentially be a lower cost option. Is that a true statement, or is that just? I know you won't know for every state, but I've thought about this idea of when does private insurance potentially make sense, and that could be one. Is that right?
So I would say, as opposed to that, I would say it's much more if you're traveling a lot, right? So if you're going to places where you're not in network a lot, so you're not going to get those benefits. Maybe you're overseas and you need coordination a little bit more for that. I would say that would be much more. Or if you're like me and I want to go to a hospital in New York, or then I want to go to a hospital in, California. That might be better for me in a private insurance than a state would handle it. A state should have coverage for you when you're in state and when you're out of state, but it probably will be out of state premiums and costs. So
I see.
The overall, and this is getting a little bit, probably too in the details, but if I know that's how I use medical, I would rather pay for that in a premium, because then I can get the tax benefit from that as opposed to paying it out of pocket. So, because that's always after tax dollars. So,
Right.
Oh, okay. Yeah.
It's worth considering how you might use your health insurance, right? And how what your living situation might be like, how much you're going to travel in state, out of country. All of those things factor into the overall cost of your insurance, and that cost is made up of your premiums that you pay no matter what, typically on a monthly basis, but then also your out-of-pocket costs, your deductibles, the co-insurance, all of those things that we're not going to deep dive into, but it sounds to me like you really have to look at it kind of holistically to consider the true cost and maybe what the best options are. Is that accurate?
100%. You do have to break it down. And that as you break down those parts and you find out which ones matter to you the most, you can look into it and see, okay, what's the premium or the up pay am I paying for this? Is that worth it for me? Or can I say, all right, I'm going to have to pay more out of pocket if I decide to go. And I always use the example of pink eye, right? So pink eye is not going to kill you. You don't have an emergency. But if you're in Greece and you have pink eye, you want to see a doctor, right? So if I'll have enough cash, I'll pay for the doctor to go and take care of that. That I don't have to buy a program that would have a coordination that could handle it. You can get some of these passport programs that will cover you wherever you are. But if I know I travel enough and I get pink eye enough, I don't want to deal with that, then I would buy up.
Okay. Yeah.
Okay.
Or just travel with that little sticky gel they give you. I ever think of that with my kids, that stuff to just butter on their eyes, you know?
That's it. That's it. It's those little, the big things are usually pretty covered. It's those little ones that are going to take all the fun out of that travel for
That's
you.
right.
It's smart. Yeah, because it always happens, man.
Yeah.
What should I be expecting, like, for premiums? Like, let's just roughly, like, I mean, I'm not used to buying healthcare on the exchange. I'm used to it just being provided by my wife's, employer. And I think a lot of people are like that. You have very little visibility into what that is. Like, what should I be expecting for, I don't know, silver what I should be looking at? I know it's a personal decision, but like, let's just say like a silver plan, like in the middle range, and it's me and my wife. Like, what should I be expecting?
So silver is like a middle range, so no huge surprises, but you do have to pay the out of pockets for things like that. For without children, it's usually about $1,500 a month. Now, I myself would probably get the premium because I like to pick my doctor. So I would probably prepare for myself, my husband, and my 2 kids about $3,000 a month.
Oh, wow.
So it does double a bit.
So when you say premium, do you mean like the gold level plan, like you're stepping up, or you mean, okay.
But that's mostly because of family. So if I have family and I have gold level, that will be about $3,000 a month.
Oh, okay. Yeah. Wow.
I can give some actuals if that would help. I mean, I know it's state by state. And so I actually presently have COBRA, and we're going to talk about COBRA soon, but I have priced out the comparable ACA plans that I would be moving to when that COBRA coverage ends.
Based on what income, though?
I actually am presently only modeling worst case, which is non-subsidized.
Okay.
Right.
I got
So this is a non-subsidized answer.
Okay, cool.
But it'll be similar to what Amy just said.
Okay.
So silver metal tier for 2 adults and a child is about $1,600 a month for my premium. I can tell you that where I live in the state matters. When I used to live farther north, it was another $300 a month, just based on where I live in the same state. The cost of healthcare differs different parts of the state, right?
Dangerous
Bay Area,
up there.
more expensive.
Yeah.
Right. I did look at that when I was considering where to live. Not something we talked about in that show, but it is another thing to consider. Anyhow, but my total out-of-pocket cost or maximum out-of-pocket cost in addition to that premium is about $7,000.
So that's your maximum out-of-pocket for the year.
Yes. So that's my deductible plus the cost of co-insurance. Yeah. My maximum out of pocket. And one of the reasons, or the primary reason I should say, that I elected a COBRA plan as opposed to a comparable plan on the exchange is my deductible on my former company's plan is lower. So my total out of pocket cost could be higher if I fully utilize that benefit on the ACA plan as opposed to my COBRA plan.
And the big thing about deductibles, which as opposed to out of pocket, that's how much money you pay before your plan starts to pick anything up, right?
Right. Okay.
And so the deductible can be only medical visits or medical visits and prescription. So if you can get your prescription in there, that's the way to go with your deductible because you'll hit that much faster.
Okay.
Yep.
So
that's right.
And this is irrespective of which level plan you choose. You need to choose, like, the deductible is a separate discussion.
So when you look at plans, the big things are going to be your premium, right? So what you pay per month.
Yep.
Your out-of-pocket costs, that will include your deductible and any co-payments. Usually that's either a flat dollar amount or the percentage, like maybe 20% of whatever you pay. So that's out-of-pocket costs. And then the third one is access. So whether it's network or it's, PPO or all those different alphabet soups, who you get to go see. Those are basically the 3 things. Now, in the old days, what they used to do is your premiums would seem fine, your out-of-pocket would seem fine, but they would put things in like a lifetime maximum that would shut off the whole plan as soon as you hit $1 million. Well, you can't even break a leg without hitting $1 million these days. So those plans were basically garbage. They were selling you were paying premiums to something that's never going to really protect you and your family. Thank goodness those are gone. So you can really only have to focus on those 3 different aspects.
Okay.
Okay.
How do I
go ahead?
like,
I'll remember it.
How do I choose, like, car insurance? They're like, you want a $5,000 deductible or you want the $1,000 deductible? Like, do I have that option?
You do, 100%.
Oh, okay.
And there are things called HSA accounts. So I happen to love them. I think they are great vehicles for saving, especially for people who are trying to get out of the workforce early, because you can contribute to them as long as you have an eligible plan while you're still working. And as long as you don't touch that money and let it grow, you can use it for the rest of your life. You can use it to pay your Medicare premiums. So I think they're wonderful. You do have to have what they call a high deductible plan for that. You can't have something that you only, I think, want to say it's $3,000 at least to count as a high deductible plan. I haven't checked for this year. Yeah. But you do have to have a pretty big hole there before you can start participating in one of those. I think they're worth it. I think it's a great way for you to really get a feel for what medical things cost, as well as being a nice tax advantaged way to save for your retirement. So I'm a big fan of those. So if you like those, then you would choose a plan that has a high deductible so you could continue to contribute to it while you're not working, and then save it for, a later point. But, it depends on where you are. And if you're using that money each year to pay off your medical plans, go with the lower deductible, because then at least you get the tax break on the premium.
Sure. Okay. Well, it makes sense for me. As a business owner, my wife is working and we have health insurance through her employer, and we don't qualify for an HSA, but when we reach FI, then we have the option to purchase health insurance through my business, I presume. And I want to talk about that a little bit, but then the HSA, I guess, becomes an option if I meet the high deductible threshold, and that makes sense for us.
Right, if you do both of those. But again, then you have less time that the money is in there working for you. So younger you get in it, better it is. But you do have to have that eligible plan.
Yeah. Okay, great.
And for me, both the COBRA plan I'm on and the comparable ACA plans that I am considering are at the silver medal tier, are both plans that qualify. They're both high deductible plans. Okay. So I do contribute the max to my HSA every year.
Jerk.
Good.
A triple tax advantage, man.
Get an employer to do it with you. That's the only thing that's better.
Yeah, no doubt. Oh man.
Hey, it's all things, right? Your wife also has an employer that contributes very actively to her retirement, so that's a benefit too.
No, and I think there's some people who will look at it and say, "Oh, I'll go. I want the high deductible healthcare plan for the HSA while giving up a bigger benefit elsewhere." And I think it's just worth talking about. So yeah, I want an HSA at some point in the future, but it probably doesn't make a lot of sense now. Interesting.
And you have to be prepared to understand medical costs. People have a huge fear of medical costs because, frankly, the systems are archaic. The billing systems don't work well. It's not clean at all. So it's a pain to keep track of, and you do have to do that with HSAs. So
and it just makes me wonder why you do the job you do. Holy smokes, this is so complicated. and
it's the best job in the world. I'm not going to lie, it really is. It is the best job in the world.
And it's not like it stays the same. That's the thing about this. Like, if we're talking about premiums, like one of my questions was, I used to work for a small architecture firm. So we had 6 people that were working for us, and they had a health insurance plan. And some years the health insurance plan would, like, the premiums would go up by like 25%. What could we expect here? Like, is that
okay? I will tell you right there, that's the problem with not having a large managed group, right? Because you just have to do what the insurance carriers say. Yeah. And the insurance carriers will always pull out numbers and say it's going to be 14%, or it's, and folks in my space go back and say it's going to be 6%. Okay. And they do, because if we get it wrong, I'm on the hook. I have to come up with the extra cash that I didn't budget. I'm never wrong. But if I were, but that's people who live and breathe with the people who are on the plan, and they understand how you utilize the care. They understand the places you're going. They can get much better numbers and just feel better about what that percentage is than someone who's dealing with a large insured group of very diverse people who access care in a lot of different ways. And that's where they come up with those big numbers, right?
Yeah.
So that's why sometimes just being a part of a conglomerate, even if it's just the AARP program, for folks that have advocates who are watching these plans, who know how you access, who advocate for how you should be able to access, can make a huge difference in your bottom line and your premium increases.
Yeah, that's great advice. It's also, it raises for me, like, and I'm sorry if these are real basic questions, but like when you say the AARP plan, is that a managed private group, like private insurance? That's not bought on the exchange, or is that like?
Yeah,
okay.
that's so that is what we haven't talked about these at all. So Medicare, right? So when you turn 65, you're going to get A and B, right? We've covered that. Then you get to choose what's called a Medicare Plus plan. And that's where you'll see it's not the exchanges anymore. It's what the exchanges are kind of trying to be, right? Okay. You can choose it. You can have your employer can sponsor one. They have private ones. AARP one's a great one that's very popular. And they pick up all the things that Medicare doesn't. So like gym membership and rides to your doctors and all the things that matter, but the premiums are much, much lower than any kind of insurance you're going to get because the government's picking up the majority of the doctor's visit and the hospital cost.
I see. Okay. So that's for 65 plus.
65 plus. Okay. And guys, I know we talk about this and it feels very real that the 16 or 17 years that you've got till you're 65 are the biggest chunk of this, but it's not. After 65 is the majority of your retirement. And that's really when life changes for you, right? Because now you're part of a community who is not, they're not really tied into what the workforce is doing at all. They really don't need nor care what the workforce is doing at all. And that's a huge change, not just in how you approach your programs and how you spend, but how you feel connected to your community around you. And that can be a real trouble time for folks if they don't approach it right and kind of the right mindset and set themselves up. So they still have very active lives and are very interested in what's going on around them.
Yeah. No, it's great perspective. Yeah. It seems like that's forever away, but
but a blink of an eye.
Oh man.
When I left my job, I elected a continuance of the same healthcare coverage I had under a program called COBRA. Could you explain what that is and what it's meant to do?
Sure. And COBRA is an acronym for a word we've all long forgotten. But it was put into place really for people to keep coverage and consistency. Because remember, before ACA, there was nothing to insist that insurers had to cover you, especially if you had a pre-existing condition.
Mm-hmm. Right.
So COBRA was put in really for folks who didn't have any other way to keep coverage. And so it is, by definition, allowed to be charged 102% of the premium that your company pays for you. So that's the portion the company pays for, the portion that you used to pay for, plus a 2% administration fee. And that's what you'll get. It's for a certain finite period of time, depending on your circumstances. And if you don't pay those premiums, they can stop you and then you're out. They don't need to cover you again. So it is something that you've always gotten when you change jobs. You probably just threw away the package if you didn't need it. You were going to another employer. It can be a very expensive option if you have a top-level program at your employer. But it can be an absolute lifesaver if you have continuous care and you really need that.
And you have to continue the same level coverage. Is that true?
You have to be, number one, enrolled in your company's program. So if you're not enrolled, you won't get an option to enroll at that stage.
Yeah.
But if you're going and you're changing circumstances, so if you're moving states, you can change programs. So it's the same kind of life events that you had when you were an active colleague. But you have to have that life event. But you'll have the same annual enrollment period that you would have if you were an active colleague through COBRA.
Okay. So Jason, you went from the gold level down to the silver?
No, actually, let me explain what I did. Because I was going to be leaving the workplace and not moving right away, I knew that I would not be eligible for a change, or at least I've been led to believe I would be eligible for a metal tier change. So what I did is I went on a silver metal plan a year in advance of my planned exit date so that I could make sure that I understood what it was like to use care at that level.
You're such a planner.
I try to be, right? Measure twice, cut once.
You're the best.
No, I'm not.
Can you just figure this out for me? Because this is just way too complex. Just like,
it's pretty awful.
Oh, man. So can I ask you, Amy, about someone who is a business owner, a small business owner? It's just me, potentially my wife and kids, could they be covered under my plan? Like my wife leaves her job. We have no health insurance. I would shop for it on the ACA, find a plan that worked for us and our family. And are all those expenses deductible through my business? Do you know?
I will give you my tax lecture as I am not a can't provide tax advice, so I can't answer that. But I would say that that's two different things, right? You looking for your family on ACA is different than you looking as an employer to put it in for you as a covered employee. And those probably have very different tax treatments.
Yeah.
So I would, on different premiums, et cetera. But, as an individual, you might have groups of folks, similar business folks who have insurance like you do that you can get in on that program as opposed to trying to be an individual employer purchasing. But yeah, I would expect that those are two different things and have different tax treatments.
Okay. Thank you. Yeah. You always hear about kind of long-term care insurance. And as I project out in the future, the longer I wait, the higher those premiums are. Do you have any general kind of advice as to when to pick it up or what to do about it?
Yeah, don't buy it.
Don't buy it?
Don't buy it. Long-term care in the States, several providers have become insolvent and several do not know what they will be doing because the programs that they sold, the experience is too high, right? So these are not programs. What you think of as a long-term care program, you really can't even buy in the States anymore because there's a general consensus that these don't work. Now, you could have bought one. I had one when I was 23. I think I paid like $65 a month. Of course, I stopped paying it when I was 24. But theoretically, I could have kept that going and would have still had it. My advice is, it's just think of it like a triangle. If you're going in now, great. You're probably going to get it all covered. If you're at the bottom of that triangle, that money's probably gone by the time you need it. So keep that in mind if you're paying premiums. Find out who your providers are. They've been sold a lot, so who you're paying it to may not be who you bought it from. Find out who they are. And, if you're paying loan premiums, think of it more of as a lottery ticket. If it's there, great. If it's not there, you got to have an alternative plan. So that would be my answer on straight long-term care. There are different life insurance products out there. They're hybrid products. There are a lot of new types of life insurance, whether they're new or not, different products you can buy that have kind of early withdrawal options. And those start to pay for what is considered custodial care. That's the big key difference, right?
Okay.
When you need the medical coverage, the Medicare will cover that.
Okay.
You're fine.
Right. Yeah.
It's the custodial care, right? So someone to help you get out of bed or get dressed or get your dinner, right?
That's what I was thinking of.
Look into some of those life insurance programs because those can be whole life. So your estate's going to get it back at some point. Or you can use it for this need, and that will it has a kind of an annuitized portion that will go forward. Those can be very interesting, and that depends not so much on your life expectancy because again it's a whole life policy. You're going to get it back at some point, but on how much you're trying to cover. So that's what I would look into. But the general long term, I don't even think you'd find someone to sell it for you at this stage.
Oh, interesting. All right. Well, thank you for illuminating that to me. It's one less thing I have to worry about, I guess.
One less thing you have to worry about, yeah. And if you have loved ones who have policies, maybe pull them out and take a look at them and see where they're at. I mean, there's been plenty of folks who have already come out and said, stop paying us. We're never going to honor this. So,
wow. Oh, God. I mean, it's just my wife just went through this with her family and looking at, some of her elderly family members dealing with custodial care in the house. And we were looking at each other going, how does that ever get paid for? I mean, unless your estate is so robust that I don't know. It just seems
the estate planners will give you like this. There's a happy medium, right? There's a place where you have your estate is large enough, right? You're really self-insuring that stuff. So you don't necessarily have to worry about it.
Yeah.
You can have a premium amount. And if you want to put that in the whole insurances, those types of things. Folks who don't have much of a estate, you don't have to worry about either. The state will take care of it, because once
Yeah.
all of your assets are gone, they will pick up the custodial. It's those in between folks that have to have some kind of strategy. And that's where it very much depends what state you live in, because even if you were to say create a trust, a irrevocable trust, so you give all your money to your kids while you're alive, you don't want anything to do with it, but you have to do that 5 years before you go into any kind of care. So that gets very tricky for that middle space. But generally the folks, and I would think if I was, trying to retire early, as I'm going to be one of the FI guys, I'm going to figure out what my self-insured number is, and I'm going to add that into my number and always know that portion is there. The costs haven't gone up that much more for the custodial than, like medical. It doesn't keep up with the medical, and the medical, of course, is still covered under the Medicare. So.
Yeah, right. Jay, how do you have that budgeted, man? You don't, do you?
No, it's something that I've talked about with
back to work for you.
With my financial advisors. They've said much the same as Amy. They've also said that there's a plenty of churn in that space right now. Not really clear that there are going to be great options, but even the great options didn't really make sense to start thinking about until you were 50 or so, or is that what they have found the sweet spot to buy into that. So no decision to take now anyhow. Let's see where things go. But basically self-coverage is their self-insured, to Amy's point, is largely the way they think about it.
I mean, once you reach financial independence, well, I never really think about life insurance as being a useful product. Am I looking at that wrong?
It depends on who you talk to. I think that it has its place, especially if you're trying to do it for tax purposes for heirs. Because they're guaranteed payouts once you get to a whole life. Somebody's going to collect that money at some point. And if you're trying to either get it out of an estate for a certain size because you're trying to hit a tax qualification, or you don't want that kind of conversation between the family, they can be useful. I am not close enough or an expert enough to understand the clauses in all of them. They are extremely complicated documents. And luckily enough, I would say my estate isn't big enough for me to really worry about it just yet. But I endeavor for it to be my problem. Yeah.
Ditto. Yeah.
So one of the options that has become popular among particularly lean fire advocates, right, people who are really looking to minimize their expenses, particularly when they're not earning anymore, is a concept that's not truly insurance as typically defined, but are these healthcare sharing exchanges, or more commonly health sharing ministries. And you can find a lot of information out there about these. Many of them are faith-based. There are several options that are not, but it has kind of a communal element of paying into a system and then it being redistributed out. But they generally don't cover pre-existing conditions and not necessarily guaranteed levels of payout for various indications. So there is certainly some risk associated with them. But again, they are somewhat popular, particularly among younger people whose, generally speaking, their healthcare cost burden is a lot lower. So the only thing I would say on it is I didn't view it as a viable option for my family based on our current healthcare needs and just my sort of risk tolerance levels, but it may be something that's interesting to you. So I would say look into those, but just be aware of what you're getting into and what insurance is and isn't. And this isn't an insurance policy. It is another type of vehicle that could apply.
Yeah. Interesting.
Yeah, I think that's super important, Jason, that you said it's not an insurance policy, because that does not sound like it has any of the safeguards that we would have to manage in when you really create a medical plan. It sounds like it's some kind of reimbursement program of some sort. So I think I would try to dig into the details of that, because, there's a lot of protections built in for, if somebody gets into a car accident and you get an astronomical price from the surgeon that's on duty because he was a specialist. You have protections in most medical plans for that. Doesn't sound like those might be there. So I would definitely check to see what type of vehicle that is.
So Amy, many people who might be listening to this are interested in doing either longer term travel outside of the U.S. or frequent travel outside of the U.S. I'm not talking about relocation where in-country medical plans may apply. I'm talking about people whose primary residence still remains in the U.S., but they're frequently outside of the U.S. How do you need to consider that, and what options might apply to someone considering health insurance options?
So I would say first that the ex-US community is much better at this than we are. They have great insurance products for travelers. You know,
Okay.
they will cover them whatever country they go to, whatever they're into, and they really are something that people get routinely. Anytime they book a trip, they'll buy their insurance product or they'll buy it for the year. So there's a lot of great products out there for ex-US. For US, we're just kind of catching up, right? You will see that some providers, when you're booking a trip or something, will offer you some kind of travel insurance, and that can have a little bit of health coverage in it, but it doesn't usually have, as I've used before, the pink eye example. It doesn't
Right.
have something that will get you to, get some care where you're at. Without having a really kind of crazy paperwork trail. So the key is to understand where you're going. If you're going to places where it's really nationalized coverage, they will most likely not turn you away. If you need any kind of just general medical care, they will take
That's
care
been
of
my
you and you'll
experience.
manage it.
Mine too.
Yep.
Yeah.
Which is lovely, right? But if you're traveling someplace where they don't have a reliable care, or you need to be able to get into kind of private practices for things like that, that's when you want to talk to like your local car insurance. Do they have something like a passport program that will, you can pay for so many weeks for a year, and that will usually pick up for you. There are
Okay.
lots of places in the world where you have to pay before you even see a doctor, right? So it's kind of like an entrance fee. So some of those programs
Right.
put that money down for you, and then you'll figure out what you're going to owe on it afterwards. So those can be helpful.
Oof, scary. I mean, we had a long-term, a week and a half hospital stay in Italy many years ago. That was completely, they have government healthcare there, but it was not without a lot of shouting to try and negotiate the price. It was pretty strange, I have to say, because we still had coverage back in the US, but they weren't accepting it. And oh my God. Yeah. So it's
lots of coordination. And
wow.
These days it's really no joke because the hospitals are full and they're concerned. And so you really do need to know as much as you can what you're talking about before you try to enter those systems.
Yeah. And it makes me think, we had travel insurance, and I know travel insurance is different, but we had travel insurance for a trip that we booked for my son pre-COVID, and COVID hit, and they're like, well, that's an exclusion. So it's like, there's all these.
As soon as they said the word pandemic, the exclusions
Done.
hit with travel insurance, medical insurance, life insurance all over the world.
Yeah.
So we had to go out and re-contract with everything.
Oh, you did? Wow.
Just to make sure of coverage.
Oh, gosh.
It was pretty universal. Yeah.
That's wild.
It was pretty scary times, but listen, whatever you got to do. So it's a tough time to travel right now, but if you're brave enough to book a trip, do look into that insurance.
Appreciate that. Yeah, cool.
One thought that comes to mind for me in terms of guidance is, with healthcare, like many things, it's really important to be your own advocate and just keep an eye out. For example, when you are on any kind of health insurance, there's always some negotiated rate for procedures, and you'll see that reflected on your bill. But make sure that what's being billed is correct. I will freely admit I was not someone that scoured the statements that I got historically, but I've got more time on my hands now and I'm paying everything out of pocket until I hit my deductible. So you better believe I look at those, and I've actually found a couple of errors, and the doctor's offices or the clinics were always willing to reevaluate and often take things off my bills that were not correct. So, I don't mean to say it's sort of an opportunity for nickel and diming, but make sure that this expense that you're incurring is valid and be your own advocate.
And also there are places now where you can go, if you're getting a routine test done, for example, you don't just accept okay, you're going here. I mean, you can get the test done at a variety of places depending on where you live. And it's probably going to have quite a different set of costs. And I know there are resources where you can go to check the costs of these kinds of procedures, but all of it, like you said, Jay, is about being your own advocate and asking the questions. Because I think transitioning from working for somebody else and being on an employer healthcare plan where you just feel free to kind of feed at the trough of healthcare options, when you make that transition to paying for it yourself, it's very hard to kind of reprogram yourself and think about, okay, well, what does this actually cost? And because you are going to be paying for it in a much different way.
Yeah, that's an excellent point, Amy.
I love the idea of Jason saying that you tried it for a year ahead of time, like just train yourself as though you look at that paperwork for the year ahead of time. Your employer will thank you, and you'll get an idea of what it all is and how complicated it can be.
Yeah.
Yeah. No,
so
that's great.
What questions aren't we asking? Because I feel like there's a lot of, you have visibility into this space like none of us. And sometimes I just don't know what to ask. So is there anything that we've missed? Where are our blind spots?
So I think the biggest thing that you haven't talked about is drug coverage, and that's really the Medicare D program. And there we can go do a whole show about the donut hole and what that means. And that's generally just it's a period of time of which the D isn't picking up your prescription costs yet.
Right.
But the truth about healthcare is, once you get into the stream of it, it's going to be much less scary and it's going to be much less complicated than anything else that you have to do in FI, right? You don't have to necessarily, you have to worry about increases, but it's not like the market going up and down and, whether, this return or that company, it's really not something that's going to be that overwhelming once you understand who you are, how you like to access, and you get the providers that you like. Right. It will become much more secondhand.
So is prescription drug coverage included on the healthcare exchange? Like, is that a separate rider, or how does that work? Because it's going to be.
It depends on the plans, right? And we talked a little bit about that deductible, whether it has the pharmacy included or it doesn't is a big difference, right? Sure. Now I believe in the high health on the HSA ones, it really does need to be that higher amount before the pharmacy kicks in. So it's usually a pretty big hole for you not to be, if you have to wait for it to be like 3,000 or 6,000, and so you're paying full price for your prescriptions. That's painful. Yeah. Because your prescriptions could be $150 every time you go and pick something up. So you do have to be prepared for that. Okay. Yes. We love to say that right now you spend 90% of your medical costs on doctors and hospitals and 10% on prescription. We would love it to be, the other way around, because that means you're not in hospitals or seeing the doctor, right? But that prescription cost can feel much worse than the others because you're paying it on your everyday life.
Sure.
Yeah. No, and this is such a great point, Amy. Something I would add to that I found valuable when I was doing my research about my options is, just assess what your current prescriptions are. If you have any in your family, anybody you'd be covering. Often there are tools available where you can model what the cost will be for that prescription under a given level of coverage. Also important, they're formularies, which are the lists of drugs that are covered. And sometimes there's different sections of the formulary in terms of total coverage or 70%, et cetera. You'll want to look at those, especially if you have particular needs. Some classes of drugs like, anti-immunosuppressives or, immunosuppressives, things like that, those are much higher cost. And so if you had a specialized need like that, you'd want to know going in what that degree of coverage is going to be and what that's going to translate to in terms of dollars.
Is there beer and wine coverage in there, Jay?
There is not, but I'm self-insured when it comes to beer and wine.
Okay, you got that covered? Good.
I do.
No one would underwrite him.
No, they wouldn't. Right. They wouldn't.
But I would say, though, that your shop around comment is very important with pharmacy. There are different prices, especially if you're paying out of pocket for different things, depending on where you're getting it, who's providing it, right? They always say Costco's a great one to get things from, but it can be very cost-effective to call the different pharmacies to ask how much they're charging for the same prescription.
Yes. Yeah. And to Eric's point, I think there are also some tools for that where that'll actually compare the prices between pharmacies for the same drugs. When you sign on for, benefits at your employer, you're often electing not only medical insurance, but dental, sometimes supplementary vision. How do you deal with those after you've left the workplace? Are there comparable programs? Is it different pre-Medicare versus post-Medicare? What types of things should people be thinking about?
Yeah, Medicare does tend to pop those in a bit more. The general post-employment, ACA does not cover dental. I think there are some, eye care coverage in that. Generally with eye care coverage, even the programs that you're getting with your employer, that coverage can be very comparable with what you can get to some of the big boxes, right? So
yes.
Unless you have very specific needs for technical glasses, it can be just as cost effective to go to Costco. I know that's where I get my glasses.
Yeah, my family too.
Yeah, because they have that pricing power. But there's not really a lot of options out there to buy individual, vision service care or something like that.
Yeah.
When it comes to the dental programs, those are usually pretty typical, just cash out of pocket limits for each year, and your premiums are pretty much paying for that. So you're just, if you start saving for the for the amount, you'd be as generally covered. Though, goodness knows that dentistry these days is quite advanced,
Yeah, absolutely. Now, I'm someone
nobody has dentures anymore. Everybody's got an implant. So.
Oh,
yes.
Right. I know it.
I am someone who unfortunately has had to leverage the dental medicine system very frequently in my lifetime. I am one of those fortunate souls. But I can tell you that in doing my own research about what my options were in early retirement, an insurance policy didn't make sense financially for me. What I found is that dentist offices will often have their own discount plans where you can prepay a certain amount, and then all your preventative care is included, and procedures are discounted. And it's just another modeling exercise, folks. So depending upon what if you never get a cavity, you're probably not going to want to prepay anything when it comes to dental. Just get those checkups, right, and keep it that way. But if you're someone that does, know what your dental history looks like, and you have, a cavity a year, or you need a root canal every 5 years, just kind of take a look at what options are out there. Get the best care you can, of course. But I found that there are some good options that I would never have considered because I was used to having the company dental insurance in the past.
I mean, the cost we have done dental insurance in the past. I think we still have it actually, and we've been heavy utilizers of it. With my kids and my wife, and man, it was a pretty close call between it being, it's like just barely made sense financially. So I don't know. If maybe we were just looking in the wrong place, but a lot of research due.
Yeah, it's all about how you want to approach your finances in retirement. If you're somebody that likes the idea of building in very large cushions everywhere and your guardrails are pretty far out from likely the mean experience, well, then maybe you don't have to consider it quite as tightly when you start talking about those ancillary services like, dental and eye care and things of that nature. But, if you're somebody that's going to operate in a pretty lean manner, well, you don't want surprises. So you want to have these things be considered as part of your planning process, I guess is the way I think about it.
Well, thank you for contributing to the knowledge out there around this very complicated subject.
Yeah, thank you so much, Amy. Really appreciate it.
And let me know if you guys have any questions that come in. I'm happy to get you answers.
Okay, awesome.
Will do.
All right, thanks so much.
Care.
All right.
Take care, Amy. Hey.
Bye-bye.
Bye-bye.
I forgot to ask Amy, if you're willing to share, are you on the FI path, or is that not interesting to you?
So I have a very distinct thought about FI. So I think everyone's on the FI path. They're just either kidding themselves or not, right?
Sure.
So it's just about what life will let you do. I love my job. I know my job is a dying breed, right? As you said, there's not pensions out there. I've chosen to go into this. So I'm always prepared that someone will say, thank you very much, Amy. We don't need you anymore. So I keep a very close eye on those numbers and my expectations and where that will all be. I have a target of where I want to get to. I don't have a date really. Like if I get to that target and I can keep doing what I love, I'm going to keep doing it.
Awesome.
Yeah. But so I do think
choose.
The freedom to choose. I think every person should be that. That's how employers think of you. That's how you should be thinking of yourself. And frankly, especially around the world, people don't take a job to stay in it for 2 or 4 years anymore. They take it to work for 6 months and then they travel for 6 months. and then they'll come back.
Yeah.
So it's a whole fi world out there as far as I'm concerned.
That's all. That's a great answer. I love that answer.